Hey everyone, and welcome back. We have a very special video for you guys today. In today's video we are going to go over buy and sell signals. And remember, if you like what you see here, please like and subscribe, and with that let's talk about buy and sell signals. Many of you already know that we use the 9-day SMA. When a candlestick crosses the SMA, we get our buy or sell signal. When a green candle passes through this, we get a buy signal. When a red candle passes through, this is a sell signal. When the price action is below the SMA, it is bearish, and when it is above, it is bullish. I avoid using the shorter SMA to avoid too many sell signals. Now we use the MACD as a second buy signal, and I wait for both the bullish cross and a candle crossing through the SMA to buy. Now if we get a bearish MACD, but the price action is above the SMA, I will not sell. I will only sell when we get a red candlestick that crosses the SMA. I briefly want to go over fakeouts, and later in the video I'm going to go over ways to avoid them. But fakeouts are when we get a buy signal, however soon after we get a sell signal. So if you would have bought in, you would have lost money or made very little profit. So now let's move on to timeframes, and I mean length of a candlestick when I use the phrase timeframes. There are short timeframes and long timeframes. Short timeframes are aggressive while long timeframes are passive. Now let's talk about pros and cons of short time frames. Pro is get in sooner, thus more profit possibly, and a con is more likely to have a fake out. Now long time frames, there's less likely of fake outs, however you get slightly less profit. Now I want to offer a warning. I really want to stress that if longer candles are showing a bearish trend, then there is more likely going to be a fake out on the shorter time frames. Another thing I want to add is that we have to have a meaningful crossing of the SMA. Barely crossing the SMA does not count. We need a meaningful cross. This is also the case on the sell side. If we get a barely sell sign, then you'll be stopped out and possibly lose profits. We need a meaningful crossing of the SMA to sell as well. Now let's go over some real life examples. We're going to go over ARK, Internet ETF, ARKW. We're looking at the 1 hour chart. So starting on November 17th, 2020, we got a clear buy signal here with this green line right here and green circle. Then we got a sell signal right here, a candlestick passing through the SMA to the downside. However, we quickly bounced back up and continued on. It would make no sense really to sell right here, but we got a sell signal. Then we got another sell signal over here, but then we quickly again went back up. And then you see it continues to go down until we really get a sell off right over here around December 28th. What are some ways that we can avoid all these sell signals and we still go up? Because we don't want to keep buying and selling multiple times in an uptrend. Well, simply put, go to a higher time frame. Now we have the 3 hour time frame instead of the 1 hour, and look at that. We don't get any sell signals until December 28th. We get a slight passing through the SMA here, but like I said earlier, it has to have a meaningful cross like we see here on December 28th, 2020. Now let's go to Bitcoin real quick as another example. If we look at the 1 hour on Bitcoin, again we see tons of fake outs at this time because we're going to the downside. See fake out here, fake out there, fake out here, like just tons of fake outs. We get positive MACDs and a passing through the SMAs, but then we quickly go back down each time. Again, to avoid this, go to a higher time frame. In this case, I like using the 6 hour and day time frames on Bitcoin. So now you see that we didn't get any confirmation on the 6 hour. 0 confirmations. But on the 1 hour we did, but it quickly went down. So when it's in a downtrend, but we get a buy signal on the short time frame, it's less likely to be a true breakout. It's more likely to be a fake out. And one thing to always consider, always look at the day time frames as well for any asset, whether it's cryptocurrency or stocks. Always look at the general overview of what's going on. So right now we're looking at ARK, ARKK. These are the daily candles, and you can quickly see that where the uptrends and downtrends are on the long time scale. So you can mess up in this box anywhere in here, but you're more likely to rebound because it's going in an uptrend on the long term. Right now you can see a clear downtrend as of March 4th, 2021. Obviously these candlesticks showed some short-term buying signals, but long-term it was not a good buy, and it just kept on going down. So it's very risky again to buy on a short time frame when the overall longer time frame is on the downtrend, if that makes sense. Now it's up to you what time frame you want to use. For ARK investments, I usually use the 3 to 4 hour. I think the day is a little too conservative, but I still use, again, the days to see what the overall trend is. Also, there's more than just this in terms of buying. If you haven't seen my support and resistance video, please check that out. But that about wraps up this video. If you like what you've seen here, please like and subscribe. And with that, thank you for watching. Until next time.